Hi, everyone. We're just going to give it a minute to let everybody in through the lobby. Thank you for joining us on today's webinar, which is all about implementing the climate change standard for the CSRD. It is World Green Building Week this week, and IGBC are hosting a number of events to commemorate this week. To build the transition and act now for the transition. They have a roadmap to net zero. If you haven't yet seen it, they have signposted how many of the subsectors in the construction industry can get and achieve net zero. We have we'd love to hear your questions. So if you could put them in the chat, we have time at the end of the webinar for a Q&A. I might also use this as an opportunity to say that there's varied expertise on the webinar. If you have questions, please do ask, but also similarly, if you have some insights, if you're already on this journey, we would love to hear about them. Just sharing the slides now. Slide there, Colin. So if you don't know about us, we're Goodbody Clearstream. We are previously Clearstream Solutions. We're a subsidiary of Goodbody Financial Services. We operate across a number of areas of sustainability, namely climate, and we'll get into that detail today. We also work on ESG reporting and responsible business framework. We work on the product side of things, so EPDs, LCAs, and LCAs. We work in responsible sourcing. We have a training wing, and we also work on nature strategy. Our agenda today is to get a little bit of an overview of the CSRD. We'll then move into, sorry, if you bear with me just a sec, we're having an issue with the slides. Yeah, we're going to get an overview of what the CSRD is. We're going to look at the 12 standards, the 12 ESRS standards. We're then going to move into understanding ESRS E1. So that's really what today is about. It's all about climate change and the work that underpins that. I'll move to a panel discussion then with my colleagues, and then we will have time for a Q&A at the end. So my name is Katie Heston. I'm a director in nature and responsible business at Clearstream.
Hi, I'm Emily. I'm a manager of climate and sustainability at Goodbody Clearstream.
Hi, everybody. I'm Mark Bennett. I'm Senior Director of Climate Strategy and Decarbonization at Goodbody Clearstream.
Hi, everyone. My name is Fionn Phelan, and I'm the Director of Climate Strategy Reporting in Goodbody Clearstream.
Thanks, guys. I guess we'll start with a little overview of what the CSRD is. So it's the Corporate Sustainability Reporting Directive. It's a piece of regulation that was brought in by the EU as part of their EU Green Deal and the Fit for 55 package. Out of this was born 12 standards that are aimed at streamlining sustainability reporting. So they're known as the ESRS standards, the European Sustainability Reporting Standards. Ireland transposed the CSRD into law in August. We're one of 12 member states who's done it to date. And really what this has done is it's amended the current Companies Act. So the Companies Act of 2014 now speaks to sustainability reporting. And I guess that really just does drive home the main aim of this piece of legislation, which is to bring your financial reporting in line with sustainability reporting. A little bit of an overview of the timelines. So there's a couple of cohorts where this is coming into play. The first one, there's about 30 companies in Ireland who will be doing a sustainability statement in next year. So they'll be publishing in 25 and they're tracking 24 data. They're the companies, the large PLCs, the listed guys who are already subject to the NFRD. The next cohort then is the non-listed large companies who meet 2 of the 3 criteria that you can see on screen there, they are going to report in 26, tracking 25 data. The next group is the SMEs, the EU SMEs, and they are reporting in 27, tracking 26. And I think the last group are the most interesting. So these are non-EU companies. So companies who are parented outside of the EU, who have substantial activity within the EU, will be asked to produce a sustainability statement in 29 on 28 data. So there's 12 standards. 2 of them are known as cross-cutting standards, and that essentially just means that they apply to everybody. So ESRS 1, I like to think of it as it describes how you engage with the following standards that will come out of your double materiality process. ESRS 2 is the general disclosures, and here is where you talk about you really just set the scene for what your business is, your value chain, the scope of this. So what's upstream, what's in your own operations, what's downstream. Talk about how you did your double materiality. Talk about how you engage with your stakeholders. Incentive schemes for your administration bodies. And there's a bit of due diligence there as well. There are 5 environmental standards, 4 social and 1 governance. And I guess this is a question that I'll be really interested to see towards the end, what if there's anybody on this journey, what you're seeing are material for your sector in the built environment. We're seeing with our clients, there's a couple of nuances. So in the built environment, we're dealing with a couple of different types of companies. We have those B2B builders. So those guys are getting designs from clients, they're building on clients' own land. And we're actually seeing that not all of the biodiversity standard is coming out as material for them. And that's purely because of the weighted difference between your value chain impacts and your own operation impacts. So that's a slight nuance. The B2C guys, so the home builders, they're typically owning that land and they have full control over their impacts on biodiversity. It's becoming much more material for those. Real estate, we're seeing that the pollution standard is more towards their upstream, their value chain, because of how they engage with contractors. And then finally, I guess, is the materials. And it's kind of too broad to comment on because you have metals to mining and then you could have concrete. So really, that's kind of what we're seeing. But I guess there's not many people who are, not many companies out there who are fully finished that double materiality just yet. So understanding ESRS E1, also known as the climate change standard. There's 4 types of disclosure points in each standard. The first one is governance. So that's ESRS 2. That's really where you talk about your double materiality, you talk about your stakeholder engagement, how the administration bodies in your business are aware and govern the topic at hand, your due diligence process. So the CSRD, the Corporate Sustainability Due Diligence Directive, did get watered down a little bit at that EU level, but you can really see here is where the EU have married together their legislations for their Fit for 55 package. You speak about the due diligence approach that you've taken towards the topic here in the first, in that governance piece. Then you move on to strategy. So in climate, that's all about your climate transition plan, which we'll get to in a moment. And you also talk about your business strategy. So previously, you'd have your business strategy sitting over here, and you'd have your sustainability strategy sitting over here. And really what these disclosures do is they ask you to bring them together and to talk about them as one, and to ensure that your business strategy going forward gives a nod to the impacts, risks, and opportunities that have come out of your double materiality. The third disclosure point is the IROs. So really that's your impacts, risks and opportunities. So here you talk about how you've gotten to the point where you have a list of material IROs. You talk about the policies that your climate change mitigation and your climate change adaptation policies, and ensure that these IROs are woven through that. And then finally, here you disclose the actions and resources plan to do with the aspirations or the goals that you've set in your policies. So the CSRD is really focusing in on that action and resource plan. You know, we can no longer just say we're doing something. We need to plan and think about how we're going to get there. The last type of disclosure point is known as an MT, and that's metrics and targets. So really, they ask for targets in all of the standards, but they're actually just prescriptive of one, and that is that target that we all know. It's the 1.5 degree scenario. They ask you about the coverage of that. So is it against your scope 1, your scope 2, and your scope 3? They ask about metrics to do with your energy consumption and where that energy comes from. And then, you know, the usual metrics that are asked in a footprinting. So your greenhouse gas emissions, total scope 1, scope 2, and scope 3. They do also ask about an internal price of carbon. And full disclosure here, we actually just have one client who has this, and the rest are getting an appetite to say that they don't have that, and it's just not within their scope. Then finally, it's that risks and opportunities piece and the anticipated financial effect of same. So this is where you really start talking about the financial impacts of the risks that you've identified, but also the opportunities of the cost of the opportunities, the finances of the opportunities, should I say. But today we're here to kind of talk in detail about what we have on the left there. So the implementation. We know that there's a big burden with CSRD reporting right now, and we are seeing like lots of sustainability teams are, you know, they're being tied up in this reporting piece. But in time, as this becomes the norm, we will see the balance come back and resource be there for innovation and action. And implementation piece on the left-hand side is what we're going to talk about. And whilst the reporting is still important, at the end of the day, how we get to a 1.5 degree world, how we get to a net zero world, how we get to our nature positive place is by action. So we're going to discuss how we do that. At Clearstream, we have 9 steps to a climate transition pathway. The first is all about baseline and understanding. So it's really just about knowing yourself and knowing your company, picking your baseline, understanding your footprint, doing a scope 3. It's an iterative process. It's done yearly, as you know, or if you are about to embark on your first carbon footprint, it's an annual process. You can get into advanced where you have, you know, primary data for your scope 3. You've collected data, you're creating EPDs, or you're doing LCAs for buildings that you build. The next piece is that climate ambition. So you understand where you are, and now you need to determine where you want to go and how do you get there. So it's that target setting piece, and then also planning the decarbonisation. So we understand, I guess it's a daunting thing to set a target and not understand fully how to get there. So you do a bit of a pathways modelling and you get a bit of an idea, get comfortable, and then you go public with your target. Final piece is the climate transition. So here you talk about risks. You talk about opportunities, you do a scenario analysis, and then you move to the reporting. So you're implementing your decarbonisation, and then you can report against it in CDP, CSRD, and also in your climate policy. Throughout the Q&A session, I will be referring back to where the points my colleagues are talking about fit into the CSRD. But I guess the first piece, so the baseline and understanding, really hits E1.5 and E1.6. So those disclosure points, there's 1 to 9 in the ESRS E1 standard. And for the first piece, so your footprinting covers E1 to E5. The next piece that my colleague Mark is going to talk about, it's that decarbon targets, and that satisfies disclosure points 1-3, 1-4, 1-7, and 1-8. And then finally, Fionn is going to talk about the climate transitioning, which does pull all of this together. So there will be a bit of repetition in the disclosure points in your climate transition plan, but E-1, E-2 and E-9 are the disclosure points that Fionn's work is going to help you report against. So we'll move to the Q&A now. Thank you. Emily, could you tell us? Pardon me. Yeah, okay. Great. Could you tell us a little bit about your work in the footprinting space?
Yeah, absolutely. Thanks, Katie. So yes, as Katie said, I work primarily in calculating carbon footprints and organisational carbon footprint for businesses in the construction sector. So essentially, this is, as Katie said, this is about understanding where you are. So what's your baseline?
Yeah.
We're essentially fitting in that foundation for what Mark and Fionn are going to speak about. a key part of this is to understand the kind of structure of it. We calculate footprints in tons of CO2e equivalent. So essentially this takes into account all the greenhouse gases that contribute to global warming.
Okay.
And that's what you're trying to measure. There are the GHG protocol, which is the global standard for calculating footprint, have defined 3 different scopes which you calculate your footprint to. So you have scope 1. Scope 1 includes your company facilities and your company vehicles. So all the direct consumption fuels in there, such as diesel, HVO, petrol, natural gas, etc., and refrigerant gases. So anything that you're using in refrigerants or in AC units in your offices. Scope 2 then covers your purchased electricity and any heat and steam. So this is where you have some control over the consumption, but you have some control over the source of those. So you might have renewable energy or non-renewable energy. For scope 2 as well, because of that difference between non-renewable and renewable energy, particularly in electricity, you'll have a location rate and a market rate. Your location rate will be based on the national grid or your local grid of electricity, regardless of the supplier that you're procuring that electricity from. And then your market rate will take into account what your supplier is doing specifically to procure renewables or non-renewable energies. And so they'll have slightly different numbers depending on that. Then that's they're very simple or easier to get.
Yeah.
And we generally call that your operational footprint.
Okay.
Then we after that, you move into the scope 3 piece.
So it's your value chain.
Essentially everything
Okay.
else. So that's working in the upstream, where we've got your purchased goods and services, your capital goods, business travel, employee commuting, upstream transportation and distribution, upstream leased assets. And then we've also got the downstream categories, which are things like your use of sold product. So what are how much energy your houses are using in their lifetime?
Okay.
The end of use treatment. What happens to those houses when they reach the end and they're demolished? Investments and downstream leased assets as well as in there, and downstream transportation. And then there's a few other ones there as well. But essentially there's those 15 categories, and they're the really big ones. And that's where carbon footprinting becomes more of it's a very creative counting, and it will change year on year as you try and get better data. This is where data becomes particularly hard to get.
Okay.
Scope 1 and scope 2, that's very easy to get primary consumption data. For your scope 3, what we say is you start with a screening. So this is a spend-based analysis. You essentially, anything you spend money on, you're going to try and put a carbon footprint to that. And either using global emission factors or methodologies and industry averages.
So secondary and primary.
Yeah.
Okay.
And then essentially that's in your first footprint, you'll probably be using a lot of screening for particularly things like purchased goods and services and capital goods.
Yeah.
But what we'd be really encouraging you to do is to try and get to the more primary data. So your activity, we're talking about the tonnage of materials, the tonnage of concrete, the tonnage of steel, the tonnage of timber that you're bringing onto site.
Okay.
And working with your suppliers.
I might just go in on the purchased goods and services there,
absolutely.
because this is a topical one for our built environment clients.
Yeah.
What's a challenge that I guess you've come across with this and with getting the data for purchased goods and services?
To be honest, the biggest challenge we see is just the volume of data. Trying to manage that data and collect it is really important, and it's a huge amount of work. Another really specific to construction is how do you deal with subcontractors? We have when we talk about purchased goods and services, we have the goods that you procure yourself, so the materials that you bring on site, but then we've also got to account for the subcontractor, which is a mixture of service that they provide in terms of the labor they bring, and then also the materials they bring. So a really nice way to kind of, I guess, start off to try and have those conversations is to build an estimation of the emissions there. Is to try and come up with a percentage average of how much of that cost you're spending with that subcontractor is based on the actual materials itself. So the tons of bricks that they're bringing on site, and then the other piece is the actual activity that they're bringing, trying that percentage.
To split out their costs to a product and a service.
But that's, exactly. So
challenging.
That's
would
really
require a bit of
challenging.
engagement.
And you need to have that, really good engagement internally, and then also with those subcontractors that you're engaging with.
Okay. And I know I'm seeing this a lot with our construction clients is project lifespans don't often run a footprinting lifespan.
Yeah.
How are you seeing companies deal with the peaks and troughs that come with construction cycles?
Yeah, absolutely. A project, it's going to have its own life cycle of a footprint.
Yeah.
And it might be more intense in 3 months of the year versus the other 3 months that were in the year before.
Yeah.
Carbon footprinting generally works on your on a calendar year or within your financial year.
Okay.
But obviously your project might go beyond that.
2 years or so, right?
Yeah.
Yeah.
Absolutely. So what we generally recommend there is that you try and calculate the footprint for the full project
Okay.
over the 2 years, and then do on a pro rata basis per month, average out the emissions for that, so that you can limit the peaks and troughs
Okay.
on that. Alternatively, you can just take it as the emissions turn up in terms of their activities in your year, and then kind of explain that within your methodology and your footprint. A good footprint should have a good bit of context underneath it to explain how they've been calculated, what you've taken into account, what you haven't, and then any changes year on year in that piece as well.
Okay, great, Emily, thank you. The work that Emily has just described, as I said, feeds into the disclosure point E1-5, which is all about your energy consumption and your mix. So where's your energy coming from? What are the quantities of that? But also E1-6, so your gross scopes, your 1, 2, and 3, your total. And then there's an intensity metric there as well. So intensity of your scope 1, 2, and 3, separate with your revenue, your annual revenue. Thanks, Emily. Might move on to Mark now. If you could give us a bit of an insight into where you go from having your footprint done.
Yes, well, obviously, if it's a Clearstream footprint, it's going to be excellent. And you take that excellent footprint. It's very important what Emily was saying, really, that whomever is doing the footprint has a very strong methodology behind it. Because when you start going into the decarb piece, what you're looking for is the hotspots.
Okay.
And you need to be able to track back and say, particularly, we break it into 2 phases. One, which is a data exercise that draws heavily from the carbon footprint.
Okay.
And then the second one, which is much more organizational, behavior specific, because it's about people. I mean, who's going to own the decarbonization? But if we take that first piece, we'll take the carbon footprint, we look for the hotspots. We look a little bit what peers in that space, if we can find out what their hotspots might be.
Okay.
And then understand the mitigants that they use in their business.
Okay.
What we'll do is we'll take all of those data points and we'll put them onto a graph. And on that graph, we'll understand the baseline.
Yeah.
And then, of course, we're doing projections. And we'll do a projection that's based on business as usual.
Okay.
So we'll do it out to 2050, but with a milestone in 2030. And out to 2030, we'll use a 5% growth rate.
Okay.
Because I think all of the businesses who are on the webinar all want to grow.
Exactly.
That's a fact of life.
Yeah.
So we put 5% to 2030 and then 2% to 2050. And that gives us a nice line of what business as usual would be.
Okay.
And then we put a line of what the decarbonization of the grid would create.
Okay.
And then we put a line as well for other things that we might do with that business. Again, just using that high level data, what's come from the carbon footprint. And essentially what we want to find out is what are the levers, the decarbonization levers that you would use to bring that company into alignment with the target that they've set. So, as we move from the carbon footprint into this first phase of decarbonization, we're going to set a target that we want that curve to fit to.
Okay.
And I think the output that we create, it's in collaboration with the client, and it's fit for decision making at the senior leadership team level of, yes, we can see that the curve is not fitting with our long-term targets.
With an understanding though, right?
And it just gives that mandate internally to say, yes, we're going to move to phase 2. We see that we could call them risks, we call them opportunities, but there's definitely a job to be done to make those curves come down. As we all know, the way the world is, the targets that we have, that's pretty much going to be almost everybody who has a business. As we move into phase 2, we do a deeper dive into the data, but we also start to iterate the workshops, because really, no matter how good the carbon footprint is, it's a snapshot in time, and it's looking at the emissions and it's using factors. But when we get people into the room who are decision makers, but also plant operators, also people who understand the business very deeply, it starts to be a conversation and people actually discover things about their own business, which is really satisfying, is that it's adding value in lots of different ways.
Okay.
But really what we want to get at the end of that is understanding the hotspots, what we can do, and what might be, a piece of plant and machinery that is a huge hotspot, but actually it has a refresh rate of maybe 10 years. So out to 2030, it's not going to be feasible to swap that piece of infrastructure out. And in that case, what we might do is use things like substitution. So you're using HVO, so
Okay.
hydro-treated vegetable oil instead of diesel, or biomethane instead of natural gas.
Is that what you're seeing our like built environment clients lean towards? HVO is popular at the moment, right?
Yeah, and that's absolutely legitimate.
Yeah.
And that's great. And
Yeah.
2030, and to meet those targets, that's
Yeah.
absolutely what we would be recommending to do. And
Okay.
we create curves and this waterfall of interventions that you can do all the time, recommending HVO. But I think, as the people on the webinar will appreciate, we have to get away from combustion fuels. So
Yeah.
ultimately what we're looking to do is to go to renewable energy and to energy generated on site, to avoid having to use the energy through higher efficiency processes. So there's all of these tactics and techniques. It's also, we talked about purchase goods and services for your scope 3.
Yeah.
It's about people and behavior change and how you manage your procurement. I think one of the issues that I've seen with our construction clients is that actually you're buying a lot from distributors. So that one distributor then has maybe 500 suppliers into it.
Okay.
And so you have to have a very nuanced approach to how you do your stakeholder engagement. But of course, as we've seen, when scope 3 is such a huge part of your emissions, that's a very important part of your strategy towards decarbonisation.
And when are you seeing our clients require the decarbonisation? Do they have to have a publicly committed, science-based target, or how are you? When are you seeing the engagement on this?
Well, I think I'm sure if you did kind of buzzword bingo, on Google, you'd find that decarbonisation, because of climate transition plans, because of CSRD, is becoming highly topical at the moment. So what I would suggest to anybody who is coming across it or sees it being mentioned in team meetings or in the board is to reach out to ourselves or to whomever, because the sooner that you take the footprint and start understanding what you can change within the footprint, how you measure it, how you understand what the data architecture of this is going to be.
Yeah.
So no more than for the carbon footprint, having a strong methodology, understanding why the decisions were made about decarbonisation will make sure that it's more fitting for the organization. So really what we would do is we do a whole series of curves. So it's very visual and understandable for people.
Okay.
We'll do a series of waterfalls. So what's your carbon emissions plus growth,
Right.
the greening of the grid, greening of transportation,
Yeah.
greening of your industry, then the things that you can do, initially substitution of fuels, but ultimately maybe investment into renewable energy. But then that has to come from us, advice about what the first step should be. So when we move into the implementation phase, we're looking at the strategy and the tactics.
Okay.
From 2030 to 2050, when you're going to have the whole of society really changing. So those risks and opportunities that the EU is now requiring are disclosed will become much more apparent, because whole industries could have, stranded assets due to the emissions that they produce. So what we do is we just do kind of an analysis or a reasoned argument that the board can then use to prioritize. And
then we'll pick the target. You don't have to have your target set in order. You can do these in tandem.
The target can be your own.
Yeah.
It could be like what you internally as a compass are going to use. I think, if you look at the industry trend, it is more usual to set a target, for example, science-based target, and then we would put that into the curve. But really, you as a company can decide what your end goal is.
Okay.
Irrespective of whatever target you choose. But it's more about not trying to show against a target what you're doing, but it's about protecting the interests that you have as a business and ensuring that you have a business in a low carbon or transition economy. And
that you can use this implementation pathway to understand what it looks like for your business to get to the target, right?
Exactly. So now I think everybody who's joining as well, if they're in the business, understands, what happens between 2045 and 2050 is, in some ways anybody's guess.
Yeah.
There's some very fundamental things that we know will have happened in terms of decarbonisation of energy infrastructure, etc. But really what we're trying to do is set a path and create the internal systems so that you can implement.
And
Because
understand.
there's nothing more frustration for any of us as professionals, both on the consultancy side or the business side, to have a report that's not going to be live. So really what we want is the decarbonisation to fit into the climate transition plan, to fit into CSRD.
Pulls it all together,
That it's all consistent, and so that the board can get behind it and say, we want to make this happen. And what we do is we set out a roadmap for, you know, what to do now, what to do next, and what to do later, and what the impact against carbon is going to be. And then those are also discussions. It may be that you go for the lower impact option, but because there are other things, other factors at play, and that's the preserve of the management and decision making within the company about what way they want to approach this. But again, if you've reasoned it out, like with methodology, then it's highly defensible.
And I guess just hotspots, like what are you seeing your construction clients focus in on in terms of decarb? Like where is there a low hanging fruit? Like what are they doing?
Everybody's into HVO right now. So I think anybody who's got vehicles, particularly heavy goods vehicles. So while we might find that the small 2-person vans or the company cars can be electrified, once you start getting into the light duty or the heavy goods vehicles, it's a lot more difficult. But what you can do is substitute the HVO for diesel. Now, as we go through all of this, is going to be very complicated, because with supply and demand, HVO might become more expensive. It's gone up a lot in price. However, heavy goods vehicles and articulated trucks, they are coming out with electric versions. There are already gas versions. It's just the reason as well why you need to plan this very carefully is the timelines for delivery for many of these things can be extended. And then also, as we know, the charging infrastructure for these can be difficult as well. I think the particular thing for, you know, companies working on other people's site is that you're a hostage to fortune over what energy they provide you with. Exactly. So that's, you know, in that context, maybe battery storage, for example, or power purchase agreements for the site. Like, there are many different options on the table.
Great. Thanks, Mark. So the work that Mark has just described there helps you in terms of reporting with 1-3, which is your actions and resources plan. So you get a thorough understanding of everything that'll be needed and what you're going to do to get to that 1.5 degree target. And look, as I said, it's not very prescriptive of the ambition of your targets across other standards. It does have guidance on how to set one, and you do have to go through a process. However, in the climate change standard, they are prescriptive, and it is the 1.5 degree scenario that they would like to see you set your ambition to. The next disclosure point that's satisfied from the work that Mark has just described there is 1-4, which is all about the targets that I've just explained. 1-7, so it's your removals, your mitigation projects, if you've any offsets, and then 1-8 is that internal price of carbon, which is a decarbonisation lever. But as I said, it is for, we're saying it's very large companies that are kind of looking towards that. The last 3 steps on the journey, if you recall, is all about that transition. So it's the risks, opportunities, climate scenario analysis, and then the reporting. So going to hear a little bit about that from Fionn, because I think seeing the climate transition plan in the disclosure asks for this standard is it's pretty ambitious. You know, we have some clients coming to us who are embarking on their first footprint, and in the same breath, they are being told about climate transition planning. So there's a big journey to be made there. But if you are in a position now where you'd like, where you are creating a transition plan, or you're ready to understand that, I guess we could hear from Fionn and see what he's doing in that space.
Yeah, thanks, Katie. And just to allude to what you just said, climate transition plans can seem a bit of a mammoth task, especially if you're just starting off. So I think in the context of this, it's good to just ground it and kind of talk about what is a climate transition plan. So a climate transition plan essentially is a comprehensive document that details the actions, targets, and resources allocated for climate mitigation and climate risk management, and in a low carbon economy. And really, in a nutshell, it's that aspiration to action piece. So you've met with Emily, you've gotten your footprint, you've met with Mark, you've gotten your target and that decarb plan. Now, what else is there left to do, and how are you going to report on that? So I think to really compartmentalize it and think of what a climate transition plan entails is to break it down to that the first section is your governance. So what needs to be a part of a climate transition plan is what's the board oversight? What's the board competencies to deal with sustainability matters and environmental matters? Is there skills and training relating to environmental matters throughout the business, and is there an onus on it? And another important facet of that is to include your climate policy, and the climate policy to detail information of your climate mitigation, adaptation, and your energy use. Another important facet of that governance piece is, and what we find is can be a struggle with some of our clients, is that resources allocated piece.
Okay.
And so that's an important thing.
Financing, is it?
Financing, yeah.
Right.
So really with that decarb initiatives that have been outlined, how much is that going to cost? Because that's really an important note that the frameworks and especially CSRD are looking within the climate transition plan.
Okay.
That next section is the meat of it, your metrics, your targets, and your decarb initiatives, as I want reiterated as the guys just said. The third part there is your climate risk management. So that involves identifying relevant climate risks and opportunities to your business. To give a brief oversight of what that looks like, climate risk can be divided into two different facets: physical risk or transitional risk. Physical risk can be acute, which is a sudden heat wave, let's say, that affects one of your construction sites.
Okay.
Or physical risk can be chronic, which is the changing of weather patterns. So increased annual rainfall means that your construction site is now a floodplain. On the other side of transitional, so more for us to limit that global increase in temperature, what's going to have to come from that? More stringent climate policy, the phasing out of fossil fuels, changes in consumer preferences, like the onus on putting an onus on timber built houses, and also the different challenges that come from your consumers maybe changing perspective on their location due to floodplains and other such things. On the other side of trying to not be in the doom and gloom of it, what are the opportunities to your company?
Yeah.
How can you use this to perhaps be more resource efficient, to avail of green finance, to change your building practices and perhaps your business strategy to really act on that want for BER rated housing and such things.
Okay.
And while within that, it must be go through different scenarios, as I said.
Right.
So the scenarios of how did those identified risks and opportunities fare if the world was 4 degrees? How would that impact on your company? If we're looking at specifically the example of temperature rise, would that mean changing in building practices? Will that mean the implementation of hot days? And
how many scenarios do you do or should you include?
So best practice, it really depends on your maturity as well.
Okay.
So if you're really just starting from ground zero and this is your first iteration,
yeah.
We would advise one physical scenario and one transitional scenario. And then as it's all intended as an iterative process. So as that builds, you want to look at 2 physical scenarios that looks at, let's say, worst case scenario of 4 degrees.
Yeah.
And to be reductive, not so great scenario of 2.5.
Okay.
And then with the transitional sense, you have to look at it. The target is 1.5, but what are the different scenarios to get there? One may be a total policy shift that fossil fuels have been completely banned. Then it's that thing of how does that impact in your business? And so it's kind of trying to get a robust analysis as best you can.
Okay.
And sorry, Katie. And also just to wrap that up, another important feature of it is the stakeholder approach.
Okay.
So how do you engage with your industry, such as the IGBC? How do you engage with academia? Are you involved in any research, or do you are involved in the universities and the pursuit of the transition? And also, how do you engage with your peers and your local communities?
Yeah, the CSRD really does focus on that stakeholder engagement, and it's not just any longer about what is my opinion as a business. It's obviously about environment and society getting captured as well. So you've gone through a table of contents. Is there a one-size-fits-all transition plan? Are different frameworks asking for different things?
So with climate transition plans, it's still very much, you could say, in its infancy, but there's 3 leading guide rails or frameworks for the climate transition plan. The one we're discussing today with the CSRD is really looking for as the bones of your climate policy, your metrics, your targets, and your decarb work.
Yeah.
But it's currently EFRAG are currently building guidance to be more in depth on what the CSRD are going to be looking for in a climate transition plan. It's also important to note within the CSRD that right now climate transition plans are not mandatory, but it is expected on the publication of that data, or pardon me, on that guidance.
Yeah.
And they'll be indicating to when that will become mandatory.
Okay. What's driving them then? What's
driving the climate transition plan is really
finance.
It comes from a variant point of view of investors.
Yeah.
So which is finance. So and then we find with some of our built environment clients that it's becoming it's mandatory in tenders. It's becoming just more prominent when they're going for jobs.
Yeah.
If I can also say on the frameworks piece that the other two leading frameworks of the CDP and UK TPT, the UK Transition Plan Task Force.
Yeah.
They are looking at the moment more as a more mature, holistic view of what a climate transition plan should be. So they're looking for that governance piece, that stakeholder engagement, and things like in the UK TPT, they're in conversation for that to become enshrined in law. The new Labour government have pledged that climate transition plans will become mandatory. So you would like to be inclined that EFRAG and the CSRD
will be looking to that.
Follow suit. Yeah.
Okay. I guess it is a bit of a mature space to be in, right? But there, we have, as I said, clients who are doing their first footprint, who are being asked by lenders and banks about climate transition planning. Do I need to have a in-depth risk register before, do I need to have a full understanding of my climate risks before I can come and start this, or when can I begin?
No, in a short answer, no, you don't need to. So we deal with a whole variety of clients that are across the broad spectrum of risk maturity.
Right.
So if a client was to come to us and hasn't considered identifying climate risk and opportunities yet, we would work with them, we'd map their business model, we would identify those climate risks and opportunities that are relevant to them.
Yeah.
And it's also being sensitive to where a company is on its journey in that regard. So you don't want to flood the risk register with 20 climate risks when it's something that hasn't even been considered before.
Okay.
So in the example of the relevant to the people on the webinar would be that, again,
if you're starting off,
that increased global temperatures affecting labor productivity on sites.
Okay.
And then the next iteration of that could be stretched out to specifically, as I said, that acute and chronic. So the global increase in temperatures affecting labor productivity, and then sudden heat waves. So looking at that more sporadic risk.
So the sudden heat wave is the acute bit.
Yeah. And then in that advanced form, we would look at more location-based data. So what are the sites are the most at risk for this?
Okay.
And then if you're looking at other things like policy risk, we delve into more the specific policies and how they would affect your
impact the business. Okay.
Isn't it true to say, like, anecdotally, there have been corporations who are looking at their air conditioning costs in a warming world? You have to spend more energy to air condition your properties, and therefore that's a material change
depending on where they are
to the balance sheet.
Yeah. So the work that Fionn has just described does pull together everything that Emily and Mark have mentioned, but I guess some key new disclosure points that are covered by that I haven't already listed is that E1-1, so that's your transition plan, obviously, discussing the risks and opportunities that the climate is posing to your business in detail. E1-2, so your policy. So you've gone through all the work, you know where you are, you know where you want to get to, and you capture that in a policy to do with mitigation and adaptation. And that's E1-2. And then the final one is the reporting piece, so E1-9. We would like to maybe take some questions if there are some in the chat. Sorry,
Very
we
good.
somehow got muted there. Sorry, Mark.
Maybe try my eagerness to share. But ArcelorMittal have come out with, and it's related at this roundtable, with a product called XCarb, which is an EPD certified low carbon steel, which is like of the low carbon steels, about a third of the carbon. So I think that's a really exciting space.
Yeah.
Yes.
Okay, a question here from Amal. What role do third-party audits play in verifying the sustainability and climate risk reports of construction companies under the CSRD? Verifying actually is an interesting one, because we know we're seeing a lot of footprints getting verified. So I might ask you about the verification piece, Emily.
Yeah, absolutely. So there are a couple of, so there's verification of limited and reasonable assurance of footprints. Currently, CSRD doesn't require it.
A verification.
And that's, sorry, we're talking about third-party verification.
Yeah.
It doesn't currently require it, as does not, you don't need one for setting a science-based target initiative target either. Where a verification statement becomes most important is if you're responding to CDP, that brings you up in points and gets you into the higher disclosure levels.
Okay.
And then the other kind of area we've seen a verification required is where client requests. So if a client comes to ask for your footprint, they might ask for it to be verified. Okay.
And then on the auditing piece, I guess we haven't really touched on that in detail, but yes, the climate standard will be required to be audited by a third-party auditor to a level of reasonable assurance for the moment. And they will be looking at all disclosure points that we mentioned there across that, Amal. Thank you for your question. Hopefully we've satisfied that. Another question. So for companies who are just in the early stages of climate action, should they be aiming to have responses to all disclosures, including a climate transition plan by year one? Or do you see this as something companies will mature on over a few years of reporting? So we did allude to the fact that a climate transition plan is a really it is an ambitious document to pull together, really. And as I said, a lot of companies are starting on their footprinting journey and now being asked about this. With the CSRD, compliance is a sustainability statement. It is up to your business to determine what your level of ambition and comfort is in being transparent and saying, we do not have a climate transition plan. We do plan to have a climate transition plan by a certain date. So if you recall back to the start, I was talking about two cross-cutting standards, so ESRS 1 and ESRS 2. And it's here where you publish a table when you're doing your sustainability statement, and it basically you list all of the disclosure points that have become material that you have a response to, and then you list all of the material disclosure points that you don't have a response to. And what they're looking for is they're looking for a timeline, they're looking for transparency, but they're also compliance is the statement. It's not ticking every single box in every single disclosure that's asked. Verification. Any other questions there? Anybody have any experiences?
Well, while we're waiting, I just something else that came from the IGBC. I thought it was interesting to your point, where the hotspots that the carbon footprint in production of the materials that go into construction.
Yeah.
For example, concrete. This is one study.
Okay.
Small, 50 instances, but 41%.
Always read the detail.
Yes, exactly. We're professionals here. So 41% in concrete, 36% in metals, 6% in insulation.
Okay.
So that's quite, it's interesting to see that, like for mass insulation is about 1%.
Yeah.
But in terms of the carbon footprint, it's about 6%.
Okay.
So you can see that the energy that goes into production is quite high.
It's high, yeah.
But all of this is to say as well that if you're doing a demolition or a refurbishment, that you try and keep as much on site as possible, because actually the ferrying to and from with
adds up.
Yeah.
Another question. So how might this impact the SMEs and micro businesses in the sector? Supply chain, really. So I guess in 27, SMEs will be asked to report, or they'll be coming into focus. But really, as you know, construction has really long supply chains, and if you're not in scope, the chances are that potentially your client, your customer, or someone is going to be coming to you, excuse me, for data. Hopefully they're not coming for you. And really that's probably going to be around that scope 3 piece. So it's the carbon is where we're seeing the engagement and that, responsible sourcing. So when our clients in construction kind of find their feet and understand what their voice is in sustainability, they're looking at targets and then they're saying, okay, we can't get there without our supply chain. It kind of applies here. The data, it's the same with data as it is with carbon. These companies are going to be asking for it. And that's how the micro businesses will be brought in or captured in some way.
Essentially, when we're talking about that scope 3 piece, your scope 3 is someone else's scope 1 and scope 2. So you're going to go and ask them for that scope 1 and scope 2. So if you think of it, if they're going to go, that's what you're going to do as well. You're going to be that ask for your scope 1 and 2 data.
Yeah. And another question in now. So is there a risk of double counting material carbon if considering imported materials that may have been accounted for in another EU company in another country? So if I'm interpreting this correctly, yes, there is double counting. Scope 3 is all double counted. Your scope 1 and 2 is somebody else's scope 3. And that's just the nature of it, really. But I think with scope 3, that is the understanding. And maybe I'm the only person in the room who judges footprints, but you don't judge the size in terms of tons of CO2 of your scope 3. What I actually look for a good footprint is the number of categories that have been included. So we all know it's double counted, but the size of your scope 3 is somewhat infinite. If you went through all the categories and every single input that could be there, it's really what would be looked at is the number of categories that you've included in your scope 3 and not the size of that. What challenges do companies face when trying to accurately measure and report scope 3 emissions under the CSRD? Because there are a lot of challenges in the access of credible data. There are, Amal. Yeah, absolutely. Emily, do you have any insights on the challenges? It's that primary data, really, isn't it?
Honestly, if you have that primary data, that's the gold dust, honestly, to get to getting a credible footprint. A credible footprint, actually, what makes a credible footprint is the transparency of your methodology.
Yeah.
If you can really clearly explain to your stakeholders exactly how you've gone about calculating your footprint, where you did have data, where you didn't have data, and how you covered that gap.
Yeah.
That is what makes it really credible. And that is where you can have that conversation with, particularly you're trying to measure that scope 3, if you're engaging with your suppliers or your major contractors in that space to go, okay, we need your data. Where are you at? And how can we kind of get that into a space where it benefits us in calculating our scope 3 and it benefits you in calculating your scope 1 and 2.
But I suppose what's wonderful about this whole story and the trend is that this is where the decarbonisation is going to come from, because all this supply chain pressure is going to reach out into the whole of the economy, and just going to raise the awareness. So I think that's actually it's very hopeful.
That's such a good point. We're really seeing that. Like, if you think of the types of questions people on the call might have been getting asked in tenders 2 years ago, like, and to what's being asked now, where is that going to lead in about 2 years' time? The maturity is escalating. Katie has a question in. So how will the auditing of CSRD link with financial auditing? Has this been considered, or do you foresee it being interconnected? So there's right now it's the big 4, the big 5, whichever one number you're choosing to count, that are doing the auditing of this. It's being done in the same way that your financials would be done, but to a different standard. So the standard which the auditors follow for CSRD is going to be published in July 2026. So until then, I guess it kind of remains to be seen exactly what they're going to be looking for. But it is going to be done in the same way that your financials will be. And I guess that audit will be done around the same time, because of course this statement, so your sustainability statement, is to go out with your financial statement or your annual report, depending on what sort of a company you are. Downstream data is still a big challenge to get in scope 3. Do we have a solution for it? I wish.
Yeah.
Engagement, I think, really, isn't it?
Yeah, absolutely. Yeah. And yeah, there's no other word for it, really. Engagement. And to be honest, just go and give it a go, you know, give a methodology a go, see if we can come up with a number. And that's the main thing really for internal purposes. And you know, then, you know, what we're seeing, like the growth in the methodologies in this space, the availability of LCAs and EPDs even in public domain to be able to then base your own off is massive. And there's some new regulations coming around that. So I think it's not quite there yet, but it's because of all of this legislation, it'll kind of ramp up in speed around that piece.
Yeah, I think, you know, in some areas of this world, there's the idea of green hushing, where people kind of don't want to say something because they don't want to kind of have their curve going in the wrong way. For me, and actually for anybody in this space that I've talked to, seeing an increase in scope 3 means you care more. So widening your boundary means that you're being more responsible.
Exactly.
So I think the scope 1 and 2 and the scope 3, you have to look at them through a different lens.
Yeah.
And actually taking on board more scope 3 is actually something to be applauded.
Yeah.
And gives you more opportunity for decarbonisation, essentially.
So a really useful practical question here in from Trisha. Is there a government-led website that sets out a clear step-by-step guide of the initial mandatory actions organisations need to follow if you're to start on your carbon footprint journey? Emily, I know you have these up your sleeve. Where would you recommend someone to go for their first footprint that isn't Clearstream?
Yeah, so that isn't Clearstream. Obviously, that would be my first choice. Then the government, the Irish government, do actually have their own footprint. I think the website link is Climate Toolkit for Business.
We'll put it in the chat after, but there are,
and essentially that'll help you at a very basic level to understand what your scope 1 and scope 2 are, and then some elements of your scope 3, like your waste, your water, and your travel, for example. So that's, you know, start with that. And also, you know, there are funds out there or
grants,
government grants out there to
Who provides them?
Enterprise Ireland and the IDA both have grants available to lots of different sizes of business to get a footprint done by either ourselves or even to deploy a carbon footprint tool.
The CIF, actually, the Construction Industry Federation, have a tool out there now. Thank you, Colin has just put that in there. So Trisha, you'll see the things that you should start to collect data on for your first footprint. CIF have a calculator. So we can follow up with some tools there. I don't actually see any more questions unless anybody has anything else. Any more? Oh,
I could fill the space that I want to do. It's just very interesting. This is all the IGBC, by the way. This is not by my calculation.
Okay.
But just some really interesting ways of viewing it. That the IGBC today are saying that 1 kilogram of concrete is equivalent of driving 1 kilometer in your car.
Yeah.
Metals. So if concrete is 1 kilometer, metals 1 kilo would be 9 kilometers, and insulation 17 kilometers. So it gives you an idea per kilo.
They've made it really practical.
Isn't that super?
You're turning out to be a real hotspot there.
But it's good over the long term. So again, these are the things like the embodied carbon within the construction versus the amount of carbon that's emitted during the operational phase of that building. So I mean, it's what the work.
Except a really important bit is that this is all going to be about trade-offs when it comes to making those decisions.
Yes.
You just have to.
There's no
consider
magic wand.
No.
Thank you very much, everyone. I think that's all from us. We will be following on with a recording of today and the slides. Look, I hope you found it useful. I find anyway that the content out there around the CSRD right now is really reporting heavy, and we kind of forget that there's work to be done apart from a double materiality and pulling together a sustainability statement. So thank you very much for joining me and giving an understanding of the work that you're doing with everyone, all of our clients in the built environment.
That's great. Thanks, Katie.
Thanks all. Cheers. Bye-bye.
Bye all. And then